Today, folks, what I'm showing you here is my Royal Bank corporate investment account containing about $125,000 invested in between Aduro Clean Technologies, my Vanguard FTSE Canadian High Dividend Yield ETF, I've got Taiwan Semiconductors, and of course the S&P 500's VOO. And I'm showing you this because we have got some of my favorite Canadian dividend stocks posting earnings, which of course we've been talking about the financial sector with the Canadian banks. And Royal Bank, for those people that might be unfamiliar with my portfolio, is the second largest position next to Taiwan Semiconductors, making up just over around 6% of my entire investments. And that's because the Vanguard FTSE Canadian High Dividend Yield ETF weights Royal Bank at about 14% of the entire holdings. And because I have over 150,000 in this ETF, you can start seeing how those numbers start to add up. So I'm very fixated on a bullish sentiment I have in the long run that I believe the bank stocks are a buying opportunity of a lifetime right now. And that's because most of them are posting incredible revenue growth still, while they're putting a lot more money aside for loan loss provisions. The reason they have to do that is because as the interest rates rise and as people have to make higher payments on their loans, it lowers the credit quality of that loan to the bank, and regulators are like, hey, these loans are getting weaker, you need to put a bigger emergency fund aside. And that's kind of like the basic ones and zeros. But over the long term, I think those loan loss provisions and these, obviously the interest rates environment will shake out some of the bad loans, and then inevitably when we get back to a sustainable market, which will inevitably be a higher interest rate in market, we're going to see these banks print money because they make more money when the interest rates are higher. So we'll talk about those numbers when we get into some of the actual bank earnings themselves. But let's take a look here because we got Canadian Imperial Bank that already posted numbers. This is one of the best performing bank stocks this year, still yielding over 5%. 12% return on the capital side of it for this year. We got Bank of Nova Scotia we discussed, which dropped 5% after posting earnings and then rallied back a little bit here, only up 4% year to date. We got Bank of Montreal, which is up 4.8%, paying 4.3%. Keep in mind, BNS is the highest paying Canadian bank right now, and I don't think you're going to do too wrong buying it on this dipped discount here. Toronto Dominion Bank is going to be posting in a couple of days, and we'll see if it can revitalize the stock a bit because it's one of the worst performers from a capital gain standpoint. But the two that posted today is obviously Royal Bank and National Bank. And just taking a look, National Bank today basically shot up like 3 or 4%, whereas Royal Bank shot down 3 or 4%. On a year-to-date basis, all these banks are kind of just falling in line with National Bank and Canadian Imperial being by far the best performers. Now, Royal Bank pays a bit of a higher yield than National Bank, but taking a look at National Bank's dividend history, since they've done some share splits, let's just go back to before the last share split, they're doing about 46 cents a quarter to today where they're doing a whopping 97 cents a quarter. So this company's done a fabulous job of basically doubling up the dividend. The performance on this is pretty stellar over the last 5 years, being by far one of the best performing banks. And taking a look at a yield basis, I like using the historical dividend yield quarter over quarter, month over month. Just gives you an idea of like, if you believe in these companies long term, it can represent a buying opportunity every time the dividend yield spikes like it did during the pandemic period. So we're definitely in a bit of a higher period, but nothing unusual to 2019. So it seems pretty nominal for National Bank. Taking a look at Royal Bank, however, the 5-year history on this is also very steady Eddie. It's it's the largest company in Canada. I mean, what do you expect with $184 billion market cap, right? And this one also going from 60 cents a decade ago, let me zoom my head out of the way, to $1.32. I mean, this company's well over doubled the dividend, and you're getting a very healthy starting yield of right around 4%. And historically, this one, like National Bank, has kind of gone back to this nominal area that we saw before the pandemic period. So it's not nearly as, substantial as something like Bank of Nova Scotia, but it hasn't dipped nearly as substantially either. But let's take a look at National Bank because, as I mentioned, all the banks are falling in line with this story that basically, take a look. Bank reports 881 million for Q1 profits, down from 930 million a year earlier. And if we just dig into the story here, guys, it's basically the National Bank Canada reported its first quarterly profits down for the first quarter as its provisions for credit losses ticked up. All these banks are putting extra money aside for credit loss provisions. But if you just fixate on revenues, forget the bottom line EPS. All these companies' bottom line EPS are dropping because those loan loss provisions are eating into their net income. But what I find most intriguing about the financial sector is they're growing. They're all pretty much growing. I mean, I think Bank of Nova Scotia had flat earnings, but the big banks are growing pretty substantially here. National Bank, they've seen revenue growth of reported up 5% on an adjusted basis, up 7%. But let's take a look at Royal Bank. Royal Bank's revenue, get this, year over year are up 16%. Quarter over quarter, up 20 freaking percent. You know how insane that is for somebody that just posted a terrible net income? Because the net income here, they kind of post right up on the side, is down 20% year over year. So when you kind of just look at the baseline EPS numbers, you're like, oh, this is horrible. These things are terrible. What's happening with these bank stocks? And when you just kind of take into that consideration, that doesn't mean just because they put loan loss provisions aside that they have to utilize that money, you know, because loans are just defaulting. That money's not there because loans are defaulting. It's there in case loans default. So something very important to take into consideration. And when you take a look at the client acquisition, as I mentioned, Canada is one of the fastest growing countries by a percentage basis versus population because we do mass immigration, and that is ticking up dramatically. Considering there's only 3 to 5 major companies in every sector, from the banking to telecom to pretty much everything, we can really see the client growth is pretty absurd. I mean, in Q1 of 2023, Royal Bank brought in an extra 130,000 clients. That is insane. That, like, in a quarter, that's absolutely nuts. Almost 1 million new clients just from 2018 to 2021, and it seems like it's growing more dramatically as time kind of passes here. It's growing way faster in 2022 and 2023. So this is something very good. I mean, it makes me super excited. It's like, how are banks doing this, right? And again, if you just take a look at the adjustments here, like, so the provisions for credit losses ticked up 7 basis points here, you know, 532 million. The diluted EPS was down 19%. Now, what's even more intriguing is Royal Bank is purchasing the Canadian counterpart of HSBC for like billions of dollars, which is going to add a huge amount of client list and bottom line in the coming quarters, I hope, as if we have to still see that acquisition come into play, and I'm pretty confident it'll close. But all those acquisitions, all this stuff going on, the growth of users here, it's just nuts. When you take a look at the Canadian banking average loans, Canadian banking average deposits, everything is growing. Everything is pretty much growing across the board, which is just beautiful. Outside of US wealth management dropping slightly on them, like, these banks are just in a very good position. It's just a matter of waiting out the recessionary environment, picking these bank stocks up at incredibly discounted prices, and then taking the benefit of not only incredibly high dividends that they can afford to pay, because most of the payout ratios don't go beyond 50 to 60% with these banks, and just sit back and just wait for all of this new revenue growth to bake in after they stop putting loan loss provisions aside. Now, I don't know how long the window of opportunity is going to be here for to allow you to cost average in and get these really great prices before the market starts to nominalize, if my thesis plays out over the next 1 to 3 years. This isn't financial advice, in my personal opinion, obviously, and I get my exposure through VDY. It weights the banking sector by like 50%, so I get huge exposure to Royal Bank, Toronto Dominion Bank, you know, all the banks realistically, and you can buy them individually. You can buy an ETF that weights them, do whatever works functionally for you, but always damn well be buying. And if you like these conversations, you want to talk with me directly, join my private WhatsApp group with 6-7 figures investors, go to my Patreon account, guys, Passive Income Investor. I'll leave the link down there below. It's $5 a month, less than a Starbucks coffee. There's tons of private content on my personal business and life, things I'll never talk about on this YouTube channel. And I'm going to be live streaming today probably, and doing a lot more private live streams about upcoming things like Tesla's Investor Day and all these other stocks, and just things that I think are fun to me that might be fun to you as well. But I'd love to know what you think about all of these conversations down in that comment section below.